Good morning students, welcome back to S.R.Tutorial. So today I have come up with two questions. Okay, so this is very important questions. Okay, and everyone has a question like this in their minds, that what is bookkeeping, okay, or what are the 5 stages of bookkeeping, or what does bookkeeping include. Okay, so what is the difference between bookkeeping and financial statements? Okay, because there is bookkeeping, okay, we learned from class 11 that bookkeeping, then there is financial statements. Now, under bookkeeping, what are the books maintained? Okay, and when financial statements are prepared, what books are maintained? Okay, so just see here. Okay, what does bookkeeping include, or what are the 5 stages of bookkeeping? Okay, so the accounting cycle with steps. This is the accounting cycle. Financial transactions, point number 1. So what does financial transactions mean? Okay, the transactions, okay, which takes place due to the occurrence of an event, okay, financial event in a business enterprise. Suppose you see a business is opened up, okay, a business is opened up, then there are a lot of financial transactions will take place in that business, yes or no? Firstly, like capital will be introduced, okay, then goods will be purchased, okay, then wages will be paid, then there will be carriage inward, okay, then the sale process will take place. So these are what? These are financial transactions. Okay, these transactions takes place due to occurrence of financial event. Okay, there is monetary matter. So these are financial transactions. Okay, now these financial transactions are not very easy to be kept in mind. Okay, the whole year round, that if a business is opened up on 1st of April, okay, with the introduction of certain amount of capital, okay, so that transaction or that record has to be maintained. Okay, so maintained in what? Maintained in the book of journal by passing what? By passing journal entries. Okay, so for the introduction of capital into the business, okay, what journal entry we pass? Cash account is debited because cash comes into the business to capital account. At the same time, capital of the business goes up, so capital account should be credited. Okay, so that journal entry we record. Okay, so after the financial transaction takes place, the journal entries are made. Okay, then from the journal entries, ledger posting is done. Okay, in my last videos you can very easily see the journal entries, then posting to the ledger, okay, then preparation of trial balance. So what does trial balance do? Okay, in the after the journal entries are passed, okay, these entries are posted to the ledger. Like for introduction of cash into the business, cash account is debited to capital account. Now cash account is prepared, capital account is prepared. In cash account we write to capital account. In capital account we will write by cash account. So that is what? That is ledger posting. Okay, ledger posting is done. Okay, then trial balance is prepared. So trial balance means what? It will record, okay, all the expenses and incomes. Okay, so there will be debit side and there will be credit side. Okay, in the debit side all the assets and the expenses will be recorded, and in the credit side all the liabilities and incomes will be recorded. Okay, and the trial balance, both the debit side and credit side should be equal. Okay, so that is trial balance. So after posting is made into the ledger, okay, the transaction, okay, the journal cash account debited to capital account, where capital account will be recorded in trial balance. where capital account will be recorded in trial. Okay, so in the trial balance, okay, so where capital account will be recorded in the liability side. Okay, and cash, it is an asset, so it will be recorded in the asset side. Okay, so if there is an introduction of cash of 50,000 into the business, okay, then 50,000 in the debit side, 50,000 in the credit side. Okay, so both debit and credit will be equal. Okay, so the trial balance is correct. Okay, so that is how trial balance is prepared. Then reporting period, the fifth point. So reporting period is what? Financial reporting and auditing. So all these statements which are prepared by an accountant, okay, is reported, okay, to the higher authorities. Okay, is shown, okay, is forwarded to the higher authorities. Okay, that is said in point number 5. Reporting period, okay, with financial reporting. Okay, then the financial reports are audited by the by the auditors. Okay, so auditing is done. Auditing is nothing but checking of books of accounts. Okay, so these are the 5 steps which are included in bookkeeping. Okay, so just see. Okay, so I hope you have understood. Okay, if you like my video, please subscribe to my channel. Thank you.